Good morning, everybody. It is Tuesday, October 3rd, 8:30 a.m. Eastern. Charting Man Dan again, filling in for Lori here. I didn't have my hair and makeup done today, so we're going to stay audio only. But we're going to look at some pretty charts and check in on where we stand for the market heading into today. I want to talk a little bit. In yesterday's video, we looked at longer term time frames and talked about some of the longer term patterns that I'm keeping an eye on and ways to have a conveyor belt of trades. So if you did not see that pregame stream yesterday morning, that's more evergreen content that is still worthwhile checking in on. But today we're going to talk about the setup for this morning, as well as a little bit about narrative and social media and things like that, and ways that I use social media as a factor in my trading. So first things first, just looking at the broader market as we check in here, S&P 500 futures, the daily bear flag is absolutely on the table as a possibility. And we know that with IWM and with XLF already confirming daily bear flags, that increases the probability that the S&P 500 can confirm this daily bear flag as well. We can definitely see, some fear is picking up on social media. We'll talk about that in just a moment. But we're going to test the low of yesterday first thing. So for SPY, that level is 424.46. And we can see the NASDAQ is holding on better, but it too is looking for a daily lower high to be the most likely result of the bounce. 3 days in a row, we're struggling at this EMA 12 resistance right now. And it's essentially the same setup as yesterday morning in the sense that, yesterday morning we started near the low of Friday, and the setup was, the bulls have to control the morning if they're going to prevent this daily lower high being set. And so here we are fading towards the low of yesterday. And it's the same thing. The bulls must show up and control the morning if we're going to remain within this tightening range. And it is possible to see a second daily inside bar form at least for a bit this morning. The bears are going to do everything they can to try and take it out first thing. But just checking back in on yesterday and how that played out, you could see that we were very weak pre-market and the bulls did exactly what they needed to do. And that was because of our major names like Amazon, Microsoft, Apple, that were leading the way to the upside. And so the question as we head into today is, can they do the same thing? And, eventually bulls are going to set this daily lower high. It's just a question of, does it get set now or later? So burden is on bulls first thing. And we're going to watch the test of support on both SPY and QQQ first thing. The dollar continues its strength. The dollar daily bull flag confirmed. We have a 4-hour bull flag trying to confirm right now. If anything were going to change, we would have to lose this support level from pre-market here, 106.93. And that level is just my morning guide level. If that level is holding, the dollar bulls don't have anything to worry about and they're keeping complete control. If that level is lost, then there's a short-term shift underway, and I would anticipate the metals to get a bit of a bounce if that were to break. But I always like finding a level, and that's why I use hourly trends so often. I'll look at Tesla and say, as long as this level holds, the bears keep complete control if it's an hourly downtrend. And just establishing essentially a morning benchmark level where, if this level breaks, things change from the trend we've been seeing over the past couple of days. If it doesn't, then nothing changes. And that's almost, it just simplifies it. It makes it, I don't have to be second guessing and analyzing and all that. It's just, if that level's holding, then I don't have to think twice. The bulls are still holding on fine. So we are battling resistance right now. And I use the dollar currently interchangeably with the 10-year. You can see the US 10-year is very similar. The daily bull flag confirmed. And so it's essentially telling me the same thing that the dollar is. It's not always the case that is happening, but in the current environment, I just use the dollar. I know a lot of people look at the 10-year, but for me, it's the dollar. So looking at the metals, we know they've been dumping extremely hard with this dollar strength recently. And currently, we've got a 4-hour downtrend as our guide. We've got an hourly, less clear for me. You can say that we confirmed a little hourly uptrend there, but I'm on the bigger picture time frames and watching the daily stair-step pattern. Gold has dropped 9 days in a row and watching for the bounce to try and take place. But again, we can't have any confidence in a dollar bounce, or I should say in a metals bounce, as long as the dollar is strong. We have to see the dollar weaken to have any confidence in a temporary bottom being set in metals. And we look at silver, and silver hasn't been as brutal as gold, but it definitely had a very hard drop the last couple of days it's trying to get its bounce underway as well. And we could say, you know, we have a little bit of a bounce while the dollar is up at the highs, so a small amount of relative strength, but again, have to see the dollar weaken more from here for anything to change. So other than that, you know, what we're seeing essentially is the metals are selling off huge, and the utilities, the last 5 days for the entire sector of utilities to be selling off 12% in 5 days is absolutely massive. And we have the utilities testing the low of yesterday first thing at 55.52. And so this is definitely, as I mentioned in the broader market video yesterday, it looks like someone's being liquidated. The magnitude and the speed of this drop, you know, everybody's rushing to the exit all at once here. And it does look like liquidation. The amount of volume, the amount of follow through. So that's something that we're keeping an eye on and essentially watching to see. I'm looking for a play in NEE, which is one of the crushed utilities names. And we have a little bit of relative strength just in the sense that currently pre-market, we're about 2% above the low of yesterday. And so what I'm watching for first thing is if XLU can hold the low of yesterday or break it with zero follow through, I would need to see a bear break straight back towards the end of yesterday resistance. And again, talking about benchmark levels, I can say the bears have absolute complete control and nothing to worry about on XLU as long as 56.29 is resistance. So a support test is coming first thing, and the setup that I would be looking for would be if XLU breaks bear with zero follow through and NEE holds the low of yesterday, then I'm going to be looking for a potential play off of that low of yesterday. For a swing trade, looking for a daily oversold bounce. And again, my style would be if I make a play off that low of yesterday, I sell partial into a few percent bounce. I ideally stick my stop under the low at that point and hope for a bit of bounce follow through. But at this point, it's going to be observation mode for the first 10, 20 minutes of the morning, essentially just to see how does XLU react to the low of yesterday. And now tying this into narratives, essentially to see the metals dumping so hard and to see the utilities dumping so hard, these are both, supposedly safe haven asset classes for when there is broader market fear. And one thing that I'm noticing a lot, and I'm sure you are as well, over the last, pretty much since CVID 3 years ago, is the fundamental narratives that people stick to and have stuck to for decades are not playing out as they quote unquote should, meaning inflation spikes huge and the metals don't really respond and act as a safe haven. And that's something that, we're seeing weakness in the broader market with, the main 7 stocks are doing a good job of holding things up, but under the hood, there's a lot of weakness in a lot of different sectors. And, for people to be rushing out of utilities. So I go on social media and Twitter and I look around at, the narrative and just, scrolling through my list. And again, I've been curating this list for years in terms of following people, muting people, blocking people, and trying to get it to be useful. And, sometimes people will post a chart and it catches my eye and say, oh, I'm going to keep an eye on that. So I have gotten trade ideas from Twitter before, but I like it for the social narrative aspect in the sense that, the narrative right now is utilities are dumping because dividends, utilities are dividend plays mostly, and dividends, generally speaking, you're talking, 4, 5%, 6% in terms of yield. And so if these T-bills and things are offering 5% yield, risk-free, that's a better choice than dividends because you don't have to worry about drawdowns of the underlying assets while you're getting those dividends. And so, again, the fact that we're dumping in 5 days this significant, it's not like this is a new thing. The rates have been up near 5% for a while. And so, again, I do believe someone is being liquidated. But just looking around at social media, I can see there are some signs of capitulation and not calling anybody out. But just this individual as an example, a dividend person. So their mindset here is the moves we're seeing in gold and the dollar and the yields haven't moved that much. The entire system is so freaking rigged. And this is an example in 2 things. Number one, potential, actually, this is the wrong thing that I wanted to pull up, but we'll talk about this one first and then the other one. So this one is showing a victim mindset. We never want to have a victim mindset as a trader because that is essentially putting the blame off to somebody else. I would have been right that metals, were the right play to be in if the system wasn't rigged. That's too easy a cop-out. Just get over that the system is rigged. We have to use price levels to dictate our decisions. We have to manage our risk because things are going to happen in the market that we are not expecting and that the world is not expecting. And one of those is being significant metals weakness while inflation is high. And so this is just something that we want to avoid. Take personal responsibility. I should have prepared for this. I should have managed my risk better or put hedges on or exit the position sooner, because that's the only way we learn. If we point the finger at other people when we make mistakes, we're never going to get anywhere. So what I was trying to pull up was... Anyways, I'm not going to find it. It was... So this one, again, not calling anybody out, just holding on to some bags as a dividend investor. But at what point do you cut? What's your strategy for losers? So this is obviously the question that you want to be asking when there's strength in the market, when things are going well. You don't want to be asking this after, dividend companies are collapsing over the last week, because that's how you capitulate at the bottom. And so that for me is a sign of some short-term capitulation. And again, it's only one little example, but just knowing the amount of volume, the amount of the drop in the utility sector, and the fact that some dividend investors are, considering throwing in the towel on some of these names right now, for me, it's just a good indication of sentiment, which is a reason that I'm keeping an eye out for this oversold bounce in the utilities names because of, that short-term extreme capitulation kind of mindset. So all that to be said, I'm keeping an eye on NEE and a potential play off the low of yesterday. What would keep me patient and keep me not entering NEE off the low of yesterday? If XLU breaks its low of yesterday and follows through and, heads quickly under 55, and if the S&P 500 is quickly heading towards its low on the daily to confirm the bear flag, and if the NASDAQ sets its daily low or high and rolls over, those are all things that would keep me patient, because the bears currently have full control right now as the broader market is seeing another leg down as we speak. And QQQ is at the low of yesterday right now, as is SPY. So again, we're on the verge of rolling over. And what bears want to see today is our big tech names set their daily lower highs as well. We know it was the big tech names that held things up yesterday. And so we want to see, if you're a bear, you want to see Amazon lose the hourly uptrend. You want to see Apple head towards the low of yesterday. You want to see all these big tech names responsible for the small amount of strength yesterday to give it back. And so that's something I'm going to be watching for today as well. Another thing I'm watching today is the cannabis sector ETF MSOS, expecting volatility to pick up here either today or tomorrow. And how do we know volatility is coming? Because we're extremely tight. We've got a support zone that's been tested 3 times. If you zoom in, we've got a short-term resistant zone in the 830s that's rejected the price essentially 4 days in a row. And just knowing that, look at the volume. This is another clue. When the volume's dropping off like this, that makes sense in a tightening range. And we're eventually going to see either today or tomorrow, in my opinion, a spike in volume and, volume that is potentially twice as much as yesterday, indicating a break. And so if we get the bear break of 762, we look for further weekly consolidation. And if we get the bull break of the 830s, we look at the potential of a weekly bull flag. But one thing that we're seeing, and crypto is a good example of that, Sunday night crypto bulls had a big move up. And then yesterday it was almost like, wait a second, there's a whole bunch of broader market fear right now. And a lot of these crypto moves that were strong sold off because of the broader market fear, in my opinion, or uncertainty. And you look at the crypto stocks yesterday, at one point on the morning, Riot was up 18%. And it just absolutely rolled over. We had, a strong start for 15, 20, 30 minutes. And then by the end of the day, we had given back 10% from the high. So it was just a story of, hey, we're strong, finally, bulls are proving something. And then it's almost like you pick your head up from your tunnel vision and you look around at the dollar still at the highs and the broader market showing weakness. And it's, wait a second, this is not what, bulls want to see from a macro perspective. And so that led to a significant amount of profit taking. And so that is in the back of my mind when I look at the cannabis sector and say, okay, it's still very high risk, high reward. Are we going to see the bulls able to hold up here while there is fear elsewhere in the market? It would certainly be very impressive if bulls can hold 762. I would be impressed, but I'm keeping an eye out for that level to potentially be tested again today in this weakness and this fear. And another place you're seeing this is the biotech sector. And again, the narrative with the biotech sector is these companies generally have a bunch of debt. And, if rates are going higher, that's seen as a negative. And so you've got the biotech sector hitting 18-month lows. And you've got the psychedelic sector, which is just the, tiny niche part of the biotech sector. It's been collapsing the last couple of weeks. CMPS, just a complete dump of 30% plus in the last 2.5 weeks or so. So overall, there's a good bit of uncertainty in the markets right now. And again, to tie that all back into the longer term timeframes that we were talking about yesterday, S&P 500 bears want to see a loss of monthly EMA 12 to create the space where eventually we confirm a monthly downtrend as the result of the next bounce. And the NASDAQ is definitely going to have to follow through a good bit further, because the NASDAQ, you look at the monthly time frame for the NASDAQ, if you tell me that's any instrument in any time frame, whether it's, an hourly chart or whatever, there are no red flags for bulls on this chart. This monthly consolidation as a result of 6 months of straight up is expected. There's no red flags here. And so the bears have to prove to me in the NASDAQ that red flags are showing. And again, it's, I see the fundamental people saying things are shifting. If utilities are not the safe haven now with rates so high, it's almost like the big tech names, the big seven, are acting as the safe haven. And that was certainly the case yesterday with all those major names up 1% to 2%, while everything else in the market was showing a lot of weakness. And so if I'm a broader market bear, I really want to see these major names and the NASDAQ weaken here, because I need to see the NASDAQ lose the monthly EMA 12 to create the space for a lower high to be the result of the next bounce. Because again, right now, this is classic bull flag. The simple statement is we've got to break the consolidation low, and that would follow through the weekly downtrend, because if we don't do that, it's going to be a confirmed weekly downtrend straight into a weekly bounce. So paying extra attention to the NASDAQ, because right now it's, I love the analogies of looking at both sides of the market. And yesterday I talked about the analogy where yesterday's trading, if there's a tug of war going on, it's a bunch of individual names on one side, and there's a lot of them, but they're smaller. And then on the other side, it's a few big names, the biggest, strongest dudes in the village. And that's, Amazon, Microsoft, Netflix, no, not Netflix, Amazon, Microsoft, Apple, NVDA. And so you got way more weaker names. They're just smaller. And so it was fairly balanced at times because the weight that these names have in the ETFs. And so watching to see if those big names roll over, because that's when things start to get significant in terms of fear. So close watch on those big names over the next couple of days. All right. I'll look at a couple tickers here. Going to wrap it up again in a few minutes, as I've got to switch over to the TheChartGuys live stream for 9 a.m. But Chewy, I know some people keep asking me about Chewy. Again, making the simple statement of, okay, we finally have a weekly bounce underway, but this is as bearish a chart as you can get. Why do I say that? Number one, you got to have a number of things. Downtrend on the monthly, weekly, daily time frame. All right, every single trend is down. Number two, all-time lows. You cannot get any weaker than being at all-time lows. So again, it's the kind of thing where we have to see, give me a reason to be bullish. Being beat up is not a reason to be bullish when you don't have anything nearby. If you've got a level nearby and you're crushed and beat up, okay, you can make a play off a level. But if you're in free fall at the lows, that to me means there is no reason to be looking long. And so what I would need to see to be looking long from a swing perspective is give me a bounce on Chewy where I miss, 10, 15%, but that shows me something. And then I look for a weekly high or low, knowing we must confirm a weekly uptrend for things to shift. And back here is a perfect example. We see a 30% bounce, but we never confirm the uptrend and we just slowly give it all back. And so again, this is not the market environment you want to be catching falling knives. If you've got the S&P 500 in a monthly, weekly, daily uptrend and at all-time highs, absolutely, try for some bottom knife catching plays on some junkers, but not in a market environment where, the cracks of fear are starting to seep in here. And so again, we will see oversold bounces on the way down, but what's the probability that I can nail the bottom on Chewy? And I don't have any confidence in that. Right now we've got a base of support in the mid 17s, but it's a very weak bounce at this point. As far as the short term, an hourly high or low compared to 1782 is the most likely scenario. But as far as bigger picture, I mean, if you're not even in a daily uptrend at this point, there's just so much proving to do. You've got to bounce for multiple weeks. You've got to confirm a weekly trend change. Then we zoom out and we're just going to look for a monthly lower high. And then you got to eventually confirm a monthly trend change. It just takes a very long time when you have downtrends on every single time frame to change those trends back in favor of the bulls. CGC had a bear break yesterday of daily lower lows, so the bears are still in complete control here. Anything under 81 cents is an hourly lower high. So here's another one where we are in a daily and hourly downtrend. And even when we bounce on the daily next from here, if we do not break 107, it's just a lower high, which means we can bounce, let's see, 30. We can bounce 50% and still be in a daily downtrend. So this is a slow fade, slow bleed kind of name after the pump. And again, just need to be really cautious and patient and have a reason and a level to go off of. I know I'm looking for a weekly high or low on CGC, but I need to see a level where I can say that's either the weekly high or low or I'm wrong and use that level as a stop. But right now, hitting fresh lows yesterday, there's no level nearby that I trust to act as support. Healthcare names, still weak overall. Tried to get a bounce going yesterday on XLV. Bulls will have to confirm the hourly uptrend if that's going to get any follow through. And UNH is definitely different looking than the healthcare sector as a whole. And it's battling a resistance zone right now of 513 to 511. You can see how many times we've topped out here back in August. And so we're still battling that level. Yes, we closed just above it, but bulls want, if we get another green day today, then I'll call that a clear bull break over this resistance zone. And it's definitely, again, very different than what the sector as a whole is doing for healthcare names. So it's got bullish correlation, we can say that much. And we've also got daily higher low guides, again, benchmark levels. We could say as long as 503 is support, the bulls have full control in the daily time frame. Just got to be cautious whenever you see a bull break into consolidation. You don't want to see that because that's what we look for in a rising wedge. And CCJ Uranium just gave us a perfect example of that. We were watching for this to be a rising wedge because we bull breaked into consolidation and then we bull breaked. And the answer was, or the statement was, if we break this low tomorrow, which was Friday, it's going to be a rising wedge shaping up because of the bull break straight into consolidation. And this works on any time frame, whether it's the 5-minute or the hourly or the daily. Just keep an eye out for signs of exhaustion. And so again, I'm not saying UNH has that right now, but if we were to have a red day today, that would have me start keeping an eye out for the possibility of a short-term rising wedge shaping up. But that's only if we are red today. All right. Appreciate you all tuning in. I'm going to wrap it up here. Switch on over to the Chart Guys stream. And we'll keep an eye on utilities to see if they remain in free fall. Metals as well. One more check-in on the dollar. Hourly had a little resistance zone. We just broke above it. So again, hourly uptrend, our guide on the day for the dollar, full bull control. And it does look like key support test in QQQ first thing with the low of yesterday. Thanks again for the likes and the shares. And we'll see you soon.